All right, welcome everybody. I'm excited to go over the new indicators with you all here, and a big thank you to Miles for joining us today from Europe. And today, really, we're just going to go over everything tool by tool to explain what the tool does, how we're using it on our charts, and to talk through some of the technicals of how the indicators are actually built so you understand the logic and programming that goes into each of these. But Melias, for those who don't know you in the community, do you mind just saying hello? Tell us a little bit about who you are professionally and as a trader.
Sure. First of all, nice to meet you all. Looking forward to this conversation. Uh, I'll keep it short. There's really not a lot of magic behind the scenes. I went through the technical route, engineering type of uni, college, whatever you call it. I started working before graduating, different startups, different just regular companies. Uh, Currently, my role is as the lead AI solutions architect, or which is a bunch of words basically that mean I design AI solutions for the company I'm currently working at, and I'm in charge of defining just global enterprise strategy, best practices, that type of area. So that's where my expertise lies mostly. Obviously, now it's mostly LLM type based, which I'm guessing everyone is fully familiar just by the trades that they are propping up. But again, I've also done the classic machine learning, deep learning area of things. Uh, as a trader, I would say I'm mostly on the swing trader bucket. That's where I feel more comfortable. I get extremely anxious on the 5 minute and the 15 minute. They feel like chaos to me. So I definitely prefer more of a swing trader style. The 4 hour is what I spend 90% of my time, if that tells you anything. So yeah, I think that would be a decent introduction. I'm a better programmer than I am a trader. I will also say that for sure.
Well, you've probably spent more time programming in your life than
That's
trading,
also
so
true. It's
10,000
that's a
hour
fair
rule.
statement.
Great. Well, we're going to go indicator by indicator. We'll start with some of the simpler ones, and then we'll move to the more complex ones at the end. And just ask your questions along the way. We'll both be trying to monitor the chat, and we want to make sure we make this as clear as possible for everyone, as this will be the living document for the time being until all the user guides are up, which I'm hoping to get some of those written ones published this weekend, but I think this will be a great starting point for us. All right, so I will pull up my trading view for the first couple of indicators, and then Melise will really take the reins at the end because I am approaching this from the lens of I know how I like to trade and what I need the tools to do, but I hit a lot of technical snags just in terms of the logic and how to program these buy and sell signals to make them reliable. And that's where Melissa was kind enough to really step in to sharpen all of that up. So let's start here. And I just need to move a couple of things around. And again, for anybody who hasn't added these yet, we have a Google form where you put in your TradingView username and your Patreon email, and that grants you access to all of these tools. And it's just connected to your Patreon membership. And then the website I'm working on, which will just be tradingapologist.com, that is going to centralize the tool access area where you can just submit right there on the site. So starting with something really simple, I just want to start with the moving averages because I added a couple of features, and just so everybody's clear on how to use this. We all use moving averages on our charts every day. And the reason this was created was because in TradingView, lots of moving averages are just for one moving average at a time. So you get lots of these stacked on your chart. This will come with the 8 most common moving averages right here, but it's not intended to keep all of those on at once. So you will go to settings and it has your daily moving averages here, your weekly moving averages. These are all SMAs. And then you can also program custom moving averages here. I just ran an update on this yesterday to put this at, let's say, some common custom moving averages. A lot of traders use the 12 and the 22, and this is actually a blend of an SMA and an EMA in the traditional sense when people use that. A lot of folks use the 55 as well as institutional support. And then some folks really like for very short time frame stuff, the 9, but you can program this to any length you like. And in case anybody is unclear on what each does, I put a little info bucket here. So SMA is a simple moving average. It's viewing each candle of, say in this case, the last 55 equally. And then the EMA, the exponential moving average, or I'm sorry, yes, exponential moving average, that is putting more weight on the recent candles. So when you put more weight on the recent candles, the moving average will be more responsive to sharp moves in the price action. But the traditional way everybody uses, say, a 200-day SMA that we see James and everybody else use on their charts, it's usually always an SMA. And so for my trading, I will have the 200-day, and I usually like the 20-week SMA on my chart because that is where on the indices you find institutional support, and you often see me with that on there. Now, the one thing I programmed into, well, I guess didn't program in, but just the math works out that way. If we are using the Confluence Bands, and we'll come back to these, but I just wanted to show this briefly, and we go to any equity, I'll just go to NVIDIA. You'll see that on the daily chart, the 20 weekly aligns with the center of the Confluence Band where we have these dotted lines. So most equities, when I'm trading on the daily, you don't even need that moving average turned on because you have the dotted line. And that's why you often find a little bit of support right in the middle of the center Confluence Band. So just to call out that overlap, it only works on equities because they trade 5 days a week. If you go to Bitcoin, like we were just on, since this is trading 7 days a week, you'll see that it's thrown off of that line. So if you are trading equities, just think of this as a 20 weekly right there in the middle. And the last thing I wanted to say on moving averages is that if you are not aware, the 20 weekly and the 100-day, I'm sorry, the 50-day. No, what am I saying here? 50 weekly. Oh my gosh, I'm getting all turned around now. Well, I will come back to these. 2 of these overlap exactly, and I am spacing on which ones they are right now, but there is some overlap there that I'm totally messing up on. All right, let's keep going. The next one I wanted to mention briefly is the Benner cycle, and this one we won't spend much time on at all, but this is one that you might check in with every few months. So if we pull that up, this is really just about the larger time frame cycle analysis. It's meant to be viewed on the weekly or the monthly, and we'll go to the SPX for this just to give us something with a lot of history. And the reason I like the Benner cycle is because it's not a fixed cycle. Each of these events is running on their own cycle within the cycle. So the troughs are spaced differently than the trim periods, than the peak panic periods. And so you don't always get this exact rhythm to it, but you do get periods like we had in the .com where the panic years and the trim years landed at the same point, which are usually areas to start paying attention. So this just gives you a guide when you're looking at the macro, everything that's going on in the world, and we have a trim portion coming up. It's just something to pay attention to. Now, the one thing I will say is that for each of the years, this was programmed to put the panics towards the end of the year, which is how Benner intended the chart to be. I moved the trough buys to the beginning of each year because these generally come a little bit late. If you notice historical pullbacks after trims, the accumulation or the buy phase is usually a bit delayed, even in this scenario. So moving it to the beginning of the year, I thought was helpful. And then the peaks, I moved to the middle of the year. So everybody can just keep that in the back of their mind for how this functions. So if we're looking out to the future, we don't have a panic till 2036 or end of 2035. I don't know what's going to happen then, but we have another trim period in 2034. So this is aligning like the .com era. And there's honestly not much happening outside of this little trim period. So we don't know what the future is going to look like. But if I was speculating, I could absolutely see a world where, okay, maybe we get some kind of panic event with overspending on AI that's not delivering the returns we're anticipating, but then it comes back. So maybe more of a mild correction. And then I could see politicians leaning into this efficiency and keeping everything going because they think the efficiency is going to grow the economy. And at this period, eventually we're going to have to reckon with debt. Maybe that all comes in the mid 2030s, or maybe this is our first big robot war. Who knows what the future is going to hold? But again, just using that as a very general guide. And then the last one to cover is the Gann Swing Indicator. And I'm not going to cover this in detail today because I've written an entire course on Gann Swing analysis, which I am going to share with the group. And I figured it would make most sense to share the Gann Swing Indicator in the Gann Swing analysis course so you can see how we actually read swings and why sometimes it makes sense to zoom out and just look at the swings of the price action rather than the individual candles. So we'll save that for another time, but the 3-bar signal in this tool is a very handy one because it normally comes before consolidation phases or before pullbacks, and the same is true at bottoms when you get 3 up bars off a extreme top or bottom in the price action. So that's all I'll say on that one for now. And in settings, if you want to turn off the swing lines, that's right there. If you want to show the swing breaks or turn that off, you can turn both of these off and you can just use it for the 3-bar signal, and then the 3-bar signal checkbox is there. But we'll get into all the details there down the line. Okay, so that brings us to the more interesting tools in the kit. So first, we'll start with trend ribbon and adaptive trend. And I'm going to pass this to Malaya since adaptive trend is really his tool. And this one is important to realize that no moving average indicator is going to be completely perfect, and they both serve different purposes.
Sure. I'll start by stealing the screen, if you don't mind.
Yep, I
Let's
just
see.
stopped my screen share.
Perfect. So with trend indicators, I think you can have a reactive one that will catch the top and will catch the bottom, but it will give you noise. Or you can, let's say, stay in it for longer and kind of avoid the noise by paying the price of being slightly late, right? So there is no real correct answer for one. And there is no way for you to do both. Stay in on the trough and also not get the signals, because the fact that is making it turn correctly at peaks is also the same logic that is making it switch in the middle. So you will need to decide which type of trend do you want to play with and then stick with it. So starting on the ribbon, right? This one is more reactive. It allows you to pick these bottoms quicker, right? It's going to find them easier, but you are also going to get more noise. And we can also see this one on the daily. Now, we also added what I'm calling the volatility adjusted trend. And the main logic behind this one is to try to avoid in choppy periods the turn. So you can see if we go, let's say, side by side, we have chop here, and then we obviously get, let's say, the noise, right? Where we are signaling a downtrend while it hasn't actually necessarily changed yet. Similar here, right? However, it will make you exit later, right? So once again, if we not this one, that's not the one, it's this one. You see, this one turns at what would be this price, so 437, while this one will have you turn at 415. So there is, again, one or the other. You will need to pick your poison. I'll explain a little bit of the logic behind this one. So this one has, let's say, beyond the moving averages, it's also accounting for ATR, volatility expansion, traded volume, and other mixture in there that have different weights to it. So by taking those things into account, like for example, it takes a look at the regime, right? What are we in a trending regime? Are we in a dead regime? Downtrend, uptrend, ranging, dead, right? So those are the main regimes. Depending on the regime that we are in, it's also going to bring down the moving averages faster or keep them, let's say, more adjusted to the price. So again, this is the area where you will want to remain inside the trade because it's basically moving sideways. And this is the area where you are going to want to not be, let's say, moving sideways. This is where you want, oh, no, we are going on a downtrend, let me exit quickly. It's one or the other, right? So if you want to basically know, hey, overall, how are we moving? Are we in a general uptrend? Are we in a general downtrend, right? If you're just trying to be informed before you do your trades, that's where volatility adjusted trend, let's say, can help. If you are trying to be reactive and get signals, that's where the trend ribbon can help you a little bit more. So one more thing, the volatility gated trend, it's definitely not for the 5 minutes. I think it, or the week, right? It's going to be too low. So I think if we move this to a 5-minute chart, it's going to be a mess. It's going to start again. Either way, giving you noise. Please do not use it at the 5-minute necessarily. That might give you whiplash. It works decently. It's not meant to necessarily be on these areas. It's really, yeah. That's why I chose this one. I see the message on Tesla. Just be aware of the pros and cons of each one, and you will decide basically. Are you getting a filter? Volatility gated, are you getting signals? Then you go with the ribbon. That's the long and short, let's say, for the trend. Tom, do you want to take it over?
Sure. The only other thing I wanted to mention on that one, and there was one question on the moving averages, so I'll just go back really quickly.
You take it.
Okay, great. So, too many windows. There we are. So on moving averages, Darwining was just asking for a recap on when to use EMA and when to use SMA. I would say, generally speaking, I usually use SMA on my charts because that's what all the institutions use, but it is slower moving. And one thing that I was not landing on for some reason, the 20-week that I keep on and the 100-day, they generally land around the same period. Those are the two I wanted to point out as overlapping. But just to show you how these two function differently, we can turn on the 200-day right here. This is the SMA, so we're viewing each of the last 200 days of price action equally. If we go over to enable, I have the 200-day EMA right here. This will put more weight on the recent volatility. So you'll see how it begins to react a little bit more dramatically to these dips. They're converging right now, and maybe 200 days isn't the best example, but traders will use an EMA, an exponential moving average, when they're trading on small time frames, so they can catch that trend flip a little bit faster. That would be the general way of thinking about it, but you can also ask your local friendly LLM for a bit more of an explanation. I don't use them a ton, but people have their reasoning for it. And then on the trend ribbon, the only other thing I want to say, and let me know if you have any input on this. This is intended to act a bit as support and resistance. So the liability of this tool is that you do occasionally get this noise when there is volatility. If the trend is very sharp and aggressive, it can really help you stay in the trend. But again, you get that bit of chop. But when you are in an uptrend, you can think of this as resistance overhead as we're getting into the cloud, and also support down below. And let's go to maybe Bitcoin as an example of how to think about that, where it's actually getting into these areas as support and resistance a bit more. And you can really see that on the larger timeframes when we go through these consolidation periods. And I like it on these longer timeframe trends as just a general guide. So that was all I really wanted to say there. But is anything else before we move on to mean reversion?
No, I think we have it covered. I think we both landed on this kind of longer time frames as well.
Yeah.
I think kind of some of our preferences leaking into the indicators, which I think makes sense. And to be fair, that's probably what you want with indicators anyway.
Yeah.
All
So,
right.
JK, you do have access to all these tools. He's just asking if we have access. When Milius goes into the mean reversion tool here, I'll share the document. So if you have submitted there and you don't have access yet, send me a note. You don't see the TA moving averages in my indicators, but I see all the others. Jax,
No,
that's,
the moving averages, because it's not invite only, just search it on the general forum.
oh,
So if you search
no,
for TA,
sorry, there is one correction there. So the moving averages, there's a free version and there's the paid version with the lock. And you want to go for the one with the lock. The free version is a light version. So what happened
no,
was,
I think you are confusing the volatility
oh,
gated one and the moving averages. The moving
yes,
averages is the only
yes,
is
you're right.
public because it has to be through TradingView. So yeah, volatility gated, go with the private one. The moving averages, it will not be with the rest on the invite only.
Right.
Just search it on the regular marketplace. I had to do the same.
Yes, that's right. Sorry, it's early and I have not had enough coffee. So, yes, absolutely right. So, what I've been doing is on the indicators, TradingView won't let you make an indicator invite only that's using open source script. So, you can see moving averages here doesn't have a lock next to it, which means it won't show up in invite only. So, you just have to search TA moving averages and then hit the star, and then you will get that. And you can just keep it in your favorites there. But on invite only, you can see I don't have moving averages in that list. So that's what was the question there. Okay, so let's move on to mean reversion. And I'll hand it to you for this. To this, I think to me the real interesting things is how did we land on less signal? Because early on there were lots of mean reversion dots and trying to filter out which ones are important to pay attention to. And then I really like how you thought about the transparent dot when we're entering back in. So I think those are, at least to me, some of the key highlights, but I'll let you take the stage.
Sure. So I think I'm going to start by saying that I have no clue how much or how little it has in common with the IA. Yeah, sorry, where I'm from, it's different with the IA tools. Mostly because, again, I used it, I have not seen what's internal. So as far as I know, they have in common the concept, but I have no clue if the internal logic matches in any relevant sense, to be honest. So I'll explain a bit the logic behind this and what we are looking at when we look at this one. By the way, I'm still on Tesla. If there is a particular need for me to open a different chart, I'm happy to do so. Just let me know. But for now, I'll stay on Tesla because it's quite volatile. And I think this is basically where more help is needed in this kind of more crazy moving assets.
Yeah, I think it's actually great to be on Tesla because, like you said, it's so volatile and Tesla doesn't respect the TA like other assets on the chart. So it's a good stress test for the tool. If it's going to work on Tesla, it'll work much better on things that are more predictable.
Yeah, I've been using this one as I've been using this as kind of my source of truth. It has to work here before I said it. So this one, out of the gate, it's going to be doing a compounding function between C-scores, RSI, and once again, and you will see this in many of the indicators, it's going to once again be also looking at volume. I think volume is quite important because it can give hidden signals in itself, especially because I don't like having the volume here. It's annoying to me. So I like it have it computed inside of it. So what this one is trying to do is two things. The first one is obviously trying to understand just at the visual level when something is oversold or overbought. And I'm going to go over some of the components because some of them might not necessarily be obvious just by looking at them. That it is an intentional part of it. So, well, obviously we have the bands, right? From 1 standard deviations to 2 standard deviations. That's, let's say, regular. This is not price standard deviation. This is not, this is the standard deviation over the oversold and overbought metric. So this is not basically, is it oversold based on the price action? It's a little bit more nuanced. You will also see, and I think it's clear here, that there is a line color change, and this line color change starts and ends at different points. This is where the setup is starting to happen. So I'll make it more obvious. You see how here it very lightly changes, but here it starts to change sooner. This is basically letting you know you should be paying attention, right? There are some metrics firing behind the scenes that might mean we get a mean reversion dot. The system operates like a state machine, which basically moves you from starting to get ready, right? Things are warming up. Now you get the dot and then you go back to regular. So it's a 4-state machine, and it can go basically both directions. Now, with that said, these dots, right, they do not necessarily wait for a candle to be red. It's just a weighted score. Not everything is scored the same way. Some things may be heavier on the scoring, and some things might be less important. And among those things that we are looking at, we are looking from candle patterns to RSI, C-score, prices. It's looking at volume. It might be looking at, let's say, multiple different things. I think the total counted things might be like 12 different things counted in there with different weights. And one other important concept is, by design, it's meant to be also played asymmetrically. I think most of us have heard the fact that the market goes up 80% of the time and down 20% of the time, or similar sayings. And if we go into the settings, especially here, right, the reversal confluence, you will see that there is the stretch threshold. What is considered oversold? You have inner band. You will get more signals if you go to inner band, right? You can also play outer bands, which is if you are trying to get more clear top and bottoms, right? But you also have asymmetric. Asymmetric will play buy in the inner and sell on the outer. And this is meant to tackle the fact that over time, markets have an up tendency. So assets do not necessarily correct down as much as they might explode up, especially, again, over time. If you look at NVIDIA, for example, it works only on asymmetric. You would not get a lot of buys necessarily, especially on higher timeframes, if you are on full outer stretch. So this is, let's say, the overall presentations in it. Again, just to repeat some of the key concepts, we have setup, then we have warm, right? So that would be the pink, red, and then the fire. And then, as Tom mentioned, there is a ghost dot, right? This dot indicates that we are going back into our regular environment. We are no longer hot. We are no longer cold, right? This means return back to normal. We are no longer close to the setup, right? So if you wanted to be extra safe, you could take this as your final confirmation. I think it's not necessarily the best way to play it, but this basically means we have exited the setup zone. There is not a lot of noise suppression hard-coded, as in it's not going to noise suppress like, oh, I gave you a dot, I'll wait 10 days to give you another one. It's just looking at the different metrics to have that natural flowing noise suppression so you can get them together if they actually make sense to stay together. I think that would be the, let's say, presentation of it. It's once again one of those indicators that is more for the daily, weekly, and 4-hour, but you can play it on the 15 minutes. Obviously, the C-score specifically, because of how the blend plays out, will look weird, but the noise, the indicator will play out in the same way, right? Just it will be uglier, which it's up to you how much you care about that one. Volume, volatility, candle patterns, all that, kind of trying to find local places of rebounding.
Wonderful. Well, Elias, do you mind turning on adaptive? Because it comes with adaptive out of the box, and people were asking about the difference.
Let me see. Where do we have? Am I actually?
Too
I
many
need to make sure. I'm
options.
not sure if this is. I'm going to get yours because I'm not sure if
Okay.
this one is one that I might still be doing things on. So I'll
Yes.
just cheat. Yeah, no worries. I'll just load yours by default, and it will get me these ones. So
Okay.
the adaptive ones, and this one is interesting because it does look incredibly ugly. Like it looks like you could go to jail for having something like this displayed. But what it's trying to tell you basically is, once again, uh, markets are not always in the same regime. They do not always have the same volatility. They do not always correct the same. And what these bands are trying to tell you is, hey, after I'm going to go back to the 4 hour, for example, just because I think it might be easier. So I'm going to bring price action down, right? So I want you to look at this area. We have choppiness in here. And at the same time that we have choppiness, if you see, we have our bands, right, adjust to the choppiness, right? And as soon as we explode up, they readjust back. So these are trying to take into account the current regime, volatility status of the market, right? Or maybe not the market, just the chart that you are playing, the equity or ticker that you are playing, because they might not always mean the same thing. Overstretched and overbought do not mean the same thing in every single regime, right? This is where the adaptive comes into play, especially, and again, you can see it once again because of the choppiness of Tesla and because of how crazy it moves. You can see it back again, right? So yeah, this would be the play. I wanted to address one thing that I actually find super interesting because I find that many people have played this wrong, including, let's say, mean reversion to some degree, right? So we are going to see that this downtrend in Tesla is going to print us the most amount of volume, right? That the most volume of dots, right, of mean reversion dots that we have by far. Look at this cluster and then look back, right? Crazy difference. So I'll explain a little bit of the reason over this because I think it, to some degree, I think it speaks quite well of the system. So while it is a very clear downtrend, if you look, we are constantly mean reverting, right? So this dot, yes, this is not the bottom, but we did mean revert to some degree. The total weight, the confluence of systems inside detected that we were going to have a mean reversion. And we did, we corrected, right? Then it went back again, right? And at some point, once again, we did, this one is, let's say, the worst signal of them all, but we did mean revert to some degree, right? Within the choppiness, again, we are still on the downtrend, but we do get these reversions on there, right? So this one, we get this one, we get all of this where, yes, these were not necessarily the bottom, but we definitely had a move up in price, right? So yes, the price up didn't reach necessarily the upper band because it was still within the downtrend, but this was such a choppy downtrend that we constantly had this short-term plays within it. So I think that's an interesting thing for the mean reversion because the logic that is encoded in it is not necessarily that this is, hey, this is the bottom of the market. That will be on the Confluence model, right? This is trying to tell you it's likely that we will get a correction, right? We will mean revert to some degree at this point, right? So that is, if I were to install some logic, let's say, or impart some logic, that is how this can help you, right? Look for the places where you might get this correction. That's it. That's, I think, most of what I have to say. I'm not sure if there are questions.
Great.
Happy to take them, if so.
I'm just going to pull up my chart really quickly because there is
Yeah,
one
go
other
ahead.
thing I wanted to say. And where do we have this? Sorry, so many windows up now. And I'm missing one, or I think I'm misunderstanding one question. There's a question from Stoic on the orange flag on the trend ribbon. So he's saying he sees an orange flag. I might be misunderstanding this, but when this flips orange, it's just moving into resistance overhead indicating that we're shifting into the downtrend. But if I'm not getting that right, feel free to speak up on the mic and we can address that in more detail. On mean reversion, where are we here? All right. So I personally like trading with adaptive because, as Millet said, a regime isn't static. Sometimes we're consolidating and sometimes volatility expands, and having the bands adapt to that gives you a more clear signal. And on Bitcoin, for instance, you can really see that start to play out on these weekly timeframes. But the thing I wanted to mention for the settings on mean reversion, and we are down here. So if you want to go to just the standard lines, turn off adaptive, and then you get those straight lines there. And I know, for instance, Mopbots likes using mean reversion and dialing in custom settings for pair trading or something like that. So if you turn off adaptive, then you have control over all these zones, and you can, give it a second, change where they land for the cloud, or I guess these bands, to give you that control for the particular asset you might be trading. So that's one thing to play with there. And then it's the one thing that I was answering questions, so maybe I missed this, but I would love to talk about this faint signal here as we re-enter the cloud. What is the thought behind that?
That one I like because we do see assets stay extended for periods of time, right? Like if you look at the RSI or C-scores or again, the IA mean reversion, right? We have seen, and again, in this one as well, you can see that it can stay, let's say, elevated or again, or just oversold for a period of time that I think might be counterintuitive, right? When you see something oversold, maybe the immediate reaction is, oh, it must come down, it must come down. Well, what the ghost dot is telling you that we are now exiting the area, right? We are now no longer meeting the requirements to print a mean reversion dot, right? So this is basically telling you that we are no longer hot, right? It's basically we are no longer about to mean we are no longer going to stay in this area. It's likely that we are now heading back to the center, right? So it's just letting you know conditions are no longer met for mean reversion. It's the fourth state machine, right? It's getting warm, mean reversion dot, exiting the area, right? That's like that's the state machine at play. It has this memory component to know in which state it is. So depending in which state it is, the machine, it knows if it has to take a look at some things or some others.
Yeah, great. Thank you. Okay.
One thing I saw a question on settings. On settings, the one I just pulled, it was the default. Depending on the asset, for example, if I'm looking at things that have a very strong uptrend, I will stay on asymmetric, right? If I'm looking at something more choppy, I might go to the outer bands, and that will actually take out a lot of noise because I don't like the 2-day trades necessarily myself, right? So that's something that I have in my default Tesla one, where I usually just go with outer because we do get a lot of choppiness, but I would not use outer, for example, in the S&P. Right? If I was looking at SPX or if I was looking at AVGO or like these assets that have already moved a lot, I would not play the outer bands. Adjust that one based on how much the asset moves percentage-wise, let's say on a week, right? Especially if it's on both directions, right? Which Tesla is very clearly known to do. Beyond that, some of the other settings, like you have that there below, right? The turn detector, right? You see basically there are different engines for detecting a turn. And this is basically, I always have pivot and rollover, but you might want to be more selective, right? On what you're trying to do, right? So up to you. I think pivot and rollover is the more important one. And then you have some regime filters in there, but I would say unless you are getting either a lot of noise or not that much noise, I would stick with defaults. Customize, let's say, at your own risk. I'm a little bit skeptic about forcefully trying to min-max an indicator, because I think you will overfit it to the past and not necessarily properly leave it to work for the future. Beyond that, the only other thing worth mentioning is two more things, actually. I'll correct myself. The trigger display filter, which you have right there, all qualifying. If you expand that one, you will see that there are different ways that you can trigger, I think, and this basically tells the system behind the scenes which things to take into account for the confluence of triggers, right? All qualifying, it will take a look at everything. But then you also have strong only pivots, high qualities, and there has to also be some RSI divergence. There needs to be candle confirmation, or it can only be on overstretched situations. That is, again, I leave it at all qualifying, but I have seen some specific assets where I do only want the high quality or the strong only, or maybe the extreme stretch. Those are basically played by the asset and the volatility of the asset, and not necessarily based on, do I want this to give me 50 signals or not? I think that is something to play around based on asset volatility more than anything else.
Yeah. And then I would encourage everybody just to look back on the particular chart you're trading to see, is this setting reliable for this particular asset? And just for context, I've been using this on the default setting with every chart so far. Granted, it's only been a couple of weeks, but I'm perfectly happy with the default settings. And what that does for me is it gives me a baseline of how mean reversion reacts, and then I can actually spot the pattern when it's doing something funky on a chart as something odd happening, and then I can look and see if I want to dial things in. But even just having it react differently on a chart is very helpful as a signal. Okay, so I totally skipped over Stack Attack. That was supposed to be before mean reversion, but we'll go back to Stack Attack, and then we'll go over to the Confluence Bands next. So let's add Stack Attack. And where are we? Too many. Too many added to the favorites. Okay, so Stack Attack. The main purpose for this, and there were some questions on, why do we have buy and sell signals on this and the Confluence Bands, and they serve different purposes. So Stack Attack is about telling you when things are overbought and oversold, and have that setting aligning on multiple time frames. And we have this color guide here. And the main way I'm using Stack Attack right now, I'm actually turning off a lot of these signals personally, because I like the entry and exit signals off of the Confluence Bands. And a lot of this I can read just on the RSI. You might miss some, like there's a red signal here where we are definitely extended on all the time frames where the color isn't necessarily coming through. Let's hide mean reversion. But when we're getting these colored bands from orange to yellow and red, that's telling you that all the RSIs from the 1 hour, the 4 hour, the daily are extended. And then when you're getting the red, there's a little buy signal here, or I'm sorry, sell signal here, right there. And I don't even want to call it a sell signal, because it's not really a sell signal. It's just a warning signal. Hey, the weekly is really extended too, and you're getting all that alignment. So this is more about telling you what's happening and to be cautious rather than exactly when to enter and exit. So, which I suppose aligns with how we normally treat RSI. RSI can get overextended, but it's not necessarily the top or bottom of the trend. It's just the time to start paying attention for those divergences and those extreme moments in markets. And I'll let you talk about the individual settings, but let me go to Bitcoin actually. Because the one thing I couldn't figure out, say on Bitcoin, was how to get this to react. And I want to go back to this period of consolidation back here in 2024, because we had a extreme run up where the weekly and everything was just overbought. And we're getting that confluence like, hey, this is at extreme levels. And actually, right here, if you turn on the Gann indicator, you had 3 down bars right there. So we can find a bit of confluence across tools. And just to turn that on, 3-bar signal right there at the top, right there, 3-bar at the bottom. So you can bring those two together sometimes. But after a period of consolidation like this, the tool wasn't telling you necessarily to get back in because the RSI doesn't get to extreme oversold conditions when you're in a period of consolidation. So this is one area where Melissa really stepped in to help program these little plus arrows. Do you mind talking about those a little bit and how they function and what they're saying?
Yes. So going, I think this is again something that we will all be familiar, and something that I think has been also commonly mentioned a lot of times as like bull flags and bear flags as well, right? So just general consolidation periods. Just because you had a massive run up, it doesn't mean that you are going to go back crashing down, right? So how do you know if this is a good place to kind of, hey, let me go back in? I sold because we had that parabolic move. Great, right? I'm out. But what if I want to go in? Where should I re-enter, right? And there are 2 types of mistakes with this one. The first one is entering immediately after, right? Like you sold, you see that it moves up a little bit, right? And then you want to immediately go back in. And the other one is that you never go back in because you are late and maybe you don't want to buy higher. The logic behind those plus arrows is to, and they are bullish only. This is basically, how do I know when to re-enter? And it has a couple of components. The first one is a cooldown period. It cannot fire before the cooldown period has expanded, right, or has expired. And that is basically an area where you are not allowed, let's say, to touch the system. You are just looking at how it reacts after a red sell signal. So this is red sell signal, go to cooldown, see how the price reacts. Once the period of cooldown ends, you enter into a logarithmic curve of preference. And what it's trying to tell you is, first of all, let me look at how it did during the cooldown period. Was the period a ranging or a trending period? If it is trending, immediately deactivate. It does not play a role on trending reentries. Trending reentries are taken, or signals are taken care by the regular system, right? Or another thing that it's going to do is take a look. Was a regular buy signal triggered? Yes, then you don't need a reentry, right? You already got a regular oversold. No need for reentries. However, if you didn't get any of these and you are indeed trending, it's going to, until the max tilt you specify, right? So I think the defaults are like 30 and 60 or 60 and 90, 30 for cooldown, max tilt at 60. For those days in between the cooldown and the max tilt, it's going to slowly shift preference from higher time frame into lower time frame, right? So the more time it passes until max tilt, the higher it is your chance to get a re-entry on lower time frame RSI, as long as, again, no regular buy signal, you are still trending, you are ranging and not trending has happened. And again, it's bullish only, so it can fire and mislead you because you can have consolidations at tops, right? However, if you're trying to stack the asset, right, this is basically where your re-entry, your bullish re-entry would be. That's the logic behind it.
Yeah, and those are these green signals right here, just so everybody's aware. Great. Now, I actually have one question, not to put you on the spot, because I thought we turned off the transparent arrows, but on the table you can see here the way to read these between the yellow, orange, and green, or yellow, orange, and red. When you're getting the yellow or orange, the 1 hour, the 4 hour, and the daily are all overbought or oversold. Now, when those get to extreme levels, say 80 plus, so 70 is the threshold at the top of the RSI line. When they're all above 80, then this moves on the overbought from yellow to orange. And then when the weekly comes into play as well, then it goes to the red, but the weekly bumps the threshold for the lower time frames back down to 70. So we're getting orange here for everything except the weekly. Here we're getting red where the weekly is involved, but I see we still have these transparent ones. Do you know what the difference is on the transparent ones? I thought I had turned those
It's
off for when it was getting close, but maybe I missed something.
I think no. I think the logic behind them is the same. It's basically setup, right? It's similar to, and again, and I guess it's because there is commonality on who is working on those, but there is constantly this setup, confirmation, action type scenario, right? The transparent ones, I think we can take out just for the visual noise, to be honest, and I think there is always an option to take them out. But those are telling you, once again, we are getting hot, but not confirmed fully hot, right? So it's not the same necessarily as a semi-signal. It's basically a setup, right? That's how I'm looking at those. Is we are setting up a red candle. We are a red triangle. We are setting up an orange triangle. So I think, again, just because I don't really like clutter necessarily on my charts, I probably would take them out visually, but they are just indicating a setup direction. That's what they are doing.
Okay, brilliant. And there was a question too, if you can still draw trend lines on the RSI. Absolutely. This is exactly the same as a standard RSI line. So you can still draw underside support, overhead resistance on all of these. And then there's a composite line, and you responded to this in the chat already. But the other option you have in here, which won't give you the reliable trend lines, but you might like it as a choice, is to go to settings, and then we have all our different display modes here, and there's a composite RSI. And so what the composite RSI is doing, it's blending the 1 hour, the 4 hour, the daily, and then you can also choose to have it include the weekly. But the weekly, we can change the weight setting, and actually I might need to run an update because I think this got turned off. But let's turn the composite on. And then if we turn the composite on, we probably want to turn off the standard because it gets very busy. But you know what? Let's just keep them both on right now so we can see the difference. And the composite is just giving you that blended average. But it would not be the traditional way to necessarily draw trends on the RSI. And you can see the composite doesn't always get to the bottom of the range and the top of the range as reliably, but it is there as a choice if you want to experiment with that. And then there was a weekly weighting. Where did I put that? Too many options here. Enable, show dip reentry, show RSI divergence. Oh, that is one thing. It's not completely perfect, and I might need your help with this still. I put in a show RSI divergence just to sharpen this up. And so this is trying to highlight areas where, as in right here, you're getting a bullish divergence where price is making lower lows and the swings in the RSI are making higher lows. And then we have a bit of a bearish divergence at the top right here, barely making higher highs, but the RSI is making lower highs. It's actually a hidden bearish divergence. I'm impressed that I picked that one up. It doesn't extend long enough. That's what I will say is the liability with this tool. In this instance right here, we're making the bearish divergence starting here, but at least with my skills, I was only able to get it to connect the dots on 2 points. So it's trying to pick the last 2 points as opposed to the very start, but it's still giving you areas to pay attention to when we are getting that divergence in play. So that's another setting you can turn on there. And where is the weekly? You know, I think I turned off that weekly option.
I think that's a hidden setting. Yeah.
Yeah,
I think
yeah, okay.
it might have gone off because we had 50,000 settings in there.
Yeah.
And I think when we simplified, we probably took that one out.
Okay, so I'm going to just run an update on that setting after we get off the call. But the idea is that you can turn off and on the weighting for the weekly, because the weekly time frame has such a big impact if you're just trading the 1 hour, 4 hour, and daily. And you'll get a little bit more signal if we strip the weekly out of there. So that can be helpful. And then you'll notice if you don't have a TradingView, is it premium, premier plan, whatever the high level one is, that Stack Attack won't work on the lower time frames. It's going to send you a message because only the top tier TradingView account can access the sub 1 minute charts. And when you're going to something like the 15-minute to look at how the RSI functions, hold please. Perfect. Of course, it's throwing me an error on the live demo. This is great. Anyway, we'll have to look into what's happening there. But this is pulling from the sub 1 second chart. And it won't do that for you if you don't have the pro account. Let me just put this back on to see what's going on there. So still a work in progress because this... Well, let me go to my normal chart. Sorry. Is this my normal chart? There we go. 15-minute. Okay, I don't know why it's working here and not on the demo chart, but I will look into that bug. But it will now work on the small time frames. You just need that top tier TradingView subscription so it can start reading at the 15-second, the 30-second to actually work on these much lower time frames. But it does give you pretty reliable reads if you are day trading on some of these dips. So that was the last thing I wanted to mention there. Okay, I have not been keeping up with the chat, but
I think we are good on questions. Last one was this one, and that's the last one.
Okay, great. Well, let's get into the Confluence bands then. Should I start with just how to read the bands, and then I'll have you get into the technicals? Okay, great. So let's do that. There was a question on how I read the Confluence bands that came up on one of the Patreon posts. So let's bring those in. And in the trading education section, I have some free perp trading classes where I really get into this in detail, but we can absolutely cover it here. I'll go to my favorite Solana because Solana was actually what got me to recognize these patterns in the Confluence bands. And really quickly, I'll just turn off all the buy and sell signals really quick, just so we can focus on the price action. Actually, there's a trigger you can do this, but you can control these all individually for the buys and sells here. And oh, I still have Stack Attack RSI on, sorry. There we go. Now we're cleaned up. All right, so the Confluence bands, these are set up exactly to the same specifications as the IA Confluence bands, but they give you the ability to control them independently depending on the asset you're trading and how volatile that particular asset is. So if you go into settings and we go into inputs, you have the control here to play with each of these bands independently. And I'm just going to make an extreme change here and give it a moment. And you can see how it moves that band up, but we'll stick with the defaults for now. But you do have that ability and you can control the background color of all of these. But I want to talk about how we read price action in the bands, because generally speaking, there is a narrative to price action that plays out time and time again. It's not the exact same thing, but we can learn a lot about strength and weakness by recognizing patterns as to how price action moves through these bands. And the question that came up on the Patreon post was, do we see the top band as overbought and the lower band as oversold? And I would say in a sense, you can view it that way as an area to pay attention. But what I've noticed is that price action takes, generally speaking, a repeatable path through the bands where we assume, or at least I assume with how I trade, that there is a baseline to how this moves. And my baseline assumption is that we move through the center band, upper band, center band, lower band, center band, upper band, center band, and then we would assume lower band. But right here, you can see that we're doing something very different. And that, to me, says a lot about the strength of the price action or the weakness of the price action, and really gets me to pay attention when we don't see that pattern repeat. So We move again into the upper band, center band, lower band, center band. Now we would assume upper band for continuation, but no, we're rejecting. And we go back into the lower band one more time, center band, upper band. And now we can repeat the pattern. Upper band, center band, lower band, center band, upper band. This was a period on Solana where it was very choppy. Actually, in the last few years of trading, I haven't seen it chop around this much, but we did get continuation. And this general pattern keeps playing out, and it plays out on multiple time frames. Even if we go out to something like the weekly, and let me compress this because it's very messy. But even on the weekly, you can see this general flow of center band, center band, upper band, center band, lower band. Now, at some point soon, we're going to expect that we're going to get back into the center band and then the upper band again. So I use this on multiple time frames to just see what's happening in the price action. And the other thing I've noticed is that most assets, when they're in the upper band or lower band, they take at least 2, sometimes 3 swings before breaking back in. So we can see this generally playing out here. And if I go back into the 4-hour and we compress this price action and we go back to a more normal time with swings back and forth, we can just see how here we get swing 1, 2, 3, and swing 1 and 2, and here swing 1 and 2, and then chop around, but again, swing 1, 2, break back in, and uptrend swing 1, 2, 3, and swing 1 and 2. So generally speaking, that's what we anticipate, swing 1 and 2. This I'm going to ignore as weird price action. But if you ever get a moment where, and this doesn't happen very often, but if you see a moment where it dips in the lower band and quickly shoots back up, that I consider a signal of extreme strength, just like I would consider a move into the upper band that quickly pulls back down a signal of weakness, or at least needing time to consolidate. So this would be a weakness signal right here, where you've had this massive run up and we chop around in the center band. You would expect a breakdown and the price action tries to push one more time, just can't do it. That I would take as an extreme signal of weakness. And then we saw what ensued after that. So just giving yourself a baseline of what's normal for the price action
can tell them, hey, if you set it up,
can be very helpful. Sorry, just had a hot mic there. And then the last thing I wanted to mention here on the price action and the swings is bringing this all together, because we don't just use this in isolation. We also have mean reversion and we have RSI turned on. Now we have RSI turned on, and we can find confluence amongst these points as we're moving in these uptrends and as we're moving through the downtrends. And what I'm looking for is the RSI to get above 70 or to get below 30. And I'm just noting that we're getting overheated in these periods. And if you've taken my perp trading class, I talk about layering out. So when we get this first signal above 70 and we're touching the top mean reversion, really the straight bands might be a better way to do this. Here we touch 70 again on this second peak. Here we really go above 70. I'm taking all of this into account, knowing that the general path of travel is 2 or 3 swings. So I'm not going to take 100% of my profit on this first signal. I'm saying, okay, we're getting overheated, but it's our first swing in the confluence band. If we really break down and move into a downtrend, maybe I just need to get out. But there's a good enough chance that we're going to take a swing 2, maybe a swing 3. So I'll look at selling perhaps 20%, then another 30%, another 30%. If I'm perp trading on the short time frames. On the longer time frames, we can maybe look for some higher time frame trend signals. And then I would be leaving another 20% as a runner, just in case this does something crazy like some of the AI stocks. But generally speaking, we then get back in to the lower band. And here, since we bounce and we break back into the upper band, this would be an area to consider re-entering the trade just based on what's happening. And then you get another one of those sell signals. You only get one here, but then breaking back into the center band would be, generally the place to look at exiting. And then we can do the same thing in downtrends. And you can always look for confirmation. If you don't want to sell on the peaks, I always tell folks, when you break back into the center band, you normally have a retest. So let's just look at that really quickly. So, and I don't want this to be a full course because we're really talking about how the indicators function, and we have that class available. But most of the time, when you break back into the center band, you get a back test for resistance, and that could be your exit point. And when you break back in after a downtrend, you usually get a back test for support. So I'll have to zoom in on it here, but you can see we break in, back test it for support, and then continue. So that could be more of a confirmation entry. And you most often do see that kind of back test for support or resistance where you break back in and maybe you don't want to sell on this downtrend, but you usually get some kind of back test here or here. You can see the back test for support and then bounce away. So learning how to read the price action within the bands can be very helpful. I still like traditional TA and reading the price action and swings, but looking at the bands as well is just a helpful guide to approximate what we often see, within charts and within price action. And the reason the 2 or 3 swings happens is related back to Elliott wave theory and 5-wave patterns, which generally give you these kinds of swings on extensions and corrections. But anyway, I'll leave it there and then we can get back into the next tool, or I guess more of the functionality here. So that is how to read the price action, but we also have lots of signal going on as well in Stack Attack. So I'll pass it to you for the rest of that on the Confluence Bands for the actual buy and sell signals and trim signals.
So this was a bit of a nightmare to get done. One of the things that I've noticed with this one is I've been constantly hitting kind of the TradingView limitations on what you can and what you can't do. So there's 5 signals in total, right? And these are independent signals to each other. And it's up to you to some degree to act on them according to your preference. And that might be a bit of a non-statement, but I think it's a good preface. So we have, I'll zoom in just so we can kind of get them all. We have these small arrows with a plus. That's an add signals. We have buy signals. We have sell, and we have trim signals. Now, each of these is doing something completely different behind the scenes. And this is where I think as I'll explain, you'll see my nightmare on it. So I'm going to start with this, buy sensitivity and sell sensitivity. I have them on neutral, right? So buy sensitivity obviously controls the add and the buy signals. Sell sensitivity will control the trim and the sell signals. Now, these settings do not simply change thresholds. This is not like how you get a buy signal above 80%, right? And if you go into aggressive, you get a buy signal on 70%. I'll explain the different logics of how this changes. But for now, I think we stay on neutral. We go over the default settings, and then I'll explain the differences. What is neutral trying to accomplish? Neutral is trying to look at the swings within the chart and identify based on, again, kind of memory components and different settings, right? When would it be a good time to scale out with trim, right? Where should you be starting to take a little bit of profit, right? Like think of random numbers, please, you then decide your own, right? But trim would be like, hey, like if you are DCAing, if you're accumulating this asset, this might be a good time to maybe sell that 5%, right? Start to maybe go a little bit into cash because it's starting to look like, hey, at some point there will be cheaper opportunities to add again. And on the other hand, right, that's what add is trying to do in the inverse, right? Like, hey, this, looking at the history of the asset, is a good moment to maybe layer in a little bit, right? So it's telling you, according to the asset's history, according to candle patterns, according to, let's say, I think it's like, I don't know, 20, and then it reduces and reweights. This is a good point to add to a position. It's starting to look like you probably need to add. And then buy, it's not necessarily the same. This share some information, but they are not the same. Buy is trying to tell you, I think this is the swing low, right? So add and trim is telling you, I think you will be able to buy or sell cheaper at a later point. This is a good moment to scale in and out slowly. Buy and sell is trying to tell you, I think this swing is over. You probably need to take heavier profits, right? So each element is independent to each other and has different logic built in. So sell and buy, swings, trim and add, basically DCA, right? DCA in and scale in, scale out, however you want to call it. You can obviously play the add and trim signals basically for your trading. This is not prohibitive. I'm not going to be with you in the computer blocking your mouse, right? It's then up to you to kind of find these patterns. But they are telling you different things, right? So you would be trimming during this period, you would be scaling back in this period. That's the main logic behind these buy and sell signals, one for swings, one for additions. Now, I saw comments on the Discord, and I think it makes sense. Yes, you can get consistent sell signals without buy signals in the middle. I mentioned this, but I don't like noise. To me, getting proper signals is more important than getting a lot and then me having to decide if I trust this one or I don't trust this one. These are 4 stacks that run independent from each other and may trigger without the other one. So there is no, according to the system, no system is perfect. There is no prime buying opportunity for a swing low within this period. So it's not telling you to go back in. It's telling you here is a good point to take profits. There is no prime swing low, right? So no prime swing low, no buy signal. So up until here, no prime swing low. These are all swing highs, right? So we have one swing, have another swing, and we have another swing. And then once it has properly had a swing back down, it will tell you now it's a good time to enter, right? This is a swing low according to the system. It will not be always perfect. Here, for example, it decides, and you see that I'll explain why I thought this was funny before. So we have a lot of mean reversion. We have also these Confluence model firing signals. And one thing that happened through here is, funnily enough, this is where a lot of James' latest entries also happened during this consolidation period. So apparently everyone thought this was continuously the bottom while it kept going down. So this is a very interesting area of price action to me, because everyone apparently was constantly misaligning on the necessarily bottom, right? Now it's still a good entry. It's at 390, and even after this correction, we are at 396. So it's not necessarily a bad place to be on, right? But these are different systems. Now, this is the neutral setting, right? It's on swings. It's trying to do kind of that DCA in, scale in and out, and swings. We have different settings. Now, if we go into aggressive, right, you will see a lot more signals for obvious reasons. You are being more aggressive, right? Now, these signals completely change the logic behind the scenes as to what is a good point of entry and what is a good point of exit. Aggressive is for trying to play most bounces, trying to accumulate in harder. You are obviously more bullish, let's say, on the asset. If you are playing aggressive, you are trying to get in more times and quicker. So these ones are trying to tell you, I think this is a very small low. Like, I think we are low. This is a low. I think this is a low. I think this is a low, right? This is what it's trying to tell you. And you will notice one key difference, which is it triggers a lot more on red candles. It's being more aggressive with the predictions and thus not waiting for full confirmation, because it's, again, the system behind the scenes is assigning, it's taking one thing out, it's pulling some other thing in on the Confluence system to decide if it's a buy or not. It's applying different weights to different things. So neutral will try to find some confirmation, will try to be more patient to not to get that swing low. Aggressive is trying to detect and kind of catch the falling knife to some degree and tell you, I think we are at some point rebounding, not short, not long after this point. So you will see, again, on a red candle, it's going to trigger. This is coinciding on a green candle, on a bottom, on a, let's say, the double bottom, if you want to call it that in here, right? You see it's trying to predict the bottoms when you go into aggressive, because it's a different engine behind the scenes, right? Now, the add signals, you will see that they are also different. They will take into account, once again, significantly different factors into what it's trying to do. Same logic for the, sell. So sell is going to try to apply the same thing the other way around. It's trying to predict more tops, right? So this is, and I think we can get more of those, I think, on the 4 hour, where it plays a bigger role. So you see, during this entire downtrend, it's trying to get you in. And then these peaks are going to be more aggressive into trying to predict the tops. Now, more signals, more noise, right? This is not just like free lunch, right? It will get you in at points where downtrend might still be happening. It's not trying to get the swing low. It's trying to tell you this is a good risk reward for an entry if you are trying to be aggressive, right? This is the main difference on these assets, on these two settings. One thing that I will mention once again is the ads have a specific logic in it that it will never trigger consistently behind, like it will never give you add. You see that they are to some degree spaced out because it's trying to find when it's going into the next phase of the price action and when it's a good point to add within that next phase. So you see kind of this consistent spacing between these two and kind of these two and these two. That is because it's letting the asset once again kind of stabilize or react after firing a signal. And then once it has fired a signal, it waits back again and sees, hey, now, is this, according to the history of the asset, has it moved once again, maybe one standard deviation lower, according to, again, the adjusted returns? So that is what AD is trying to do, is moving by phases, trying to identify these scenarios. You will see AD, it's very hard for it to trigger during a kind of trending up, because that's where the engine switches to trim. If you are up trending, you are not necessarily scaling in. You would be scaling out. So these are parallel engines. It's very weird for them to fire one and the other. They are meant as like this consolidation area because we have this huge volatility in it. Like we have 14% very quickly in there, but they are different engines, let's say, meant for different things. So the only thing missing is conservative, and conservative is something to be played on the daily or weekly. It will give you very few signals, very few, right? And it's going to favor a lot more the trim and add signals. This is basically, you're not trying to take risk. You're just doing small positions in and out, scaling in, scaling out, right? And it will only fire buy signals if there is a very obvious case, right? So this is like, you will get a signal in 5 years. It's more about cycles, and it's the less refined because it's more focused on, again, trimming in and out. That is what it's trying to help you do. So this is not necessarily as much for trading in a conservative manner. It is about, you are conservative, you are aggressive, right? What's your style? If you are conservative, this is where you buy, you trim a little, you buy again, right? again, different mentality. It's a different engine. So this is like 6 different engines in parallel to each other. And obviously you can customize how you pair them together. So you can very clearly, right, no one's going to block you, have a neutral by sensitivity, but an aggressive sell. And you would be buying here and then trimming your ads through this place and then selling more aggressively in these areas. So take a look at your asset, see how it behaves on the specific time frame, right? Because the lower your time frame, then maybe the more noise aggressive is going to be. And the higher your time frame, less noise aggressive is going to be, right? So I am expecting less noise in aggressive on the daily than I am on the 4-hour, because there are less chances for kind of volatility to happen intraday. And the same for if I go to weekly, I'm going to get a lot less signals because weeks are more stable. There is more time for kind of these news events to be digested and hidden on the price action. So maybe at this point, I want to be aggressive on my buys. And now I'm getting proper signals like throughout the entire bottom, right? Because it's weekly, the noise is filtered out by default, let's say, on that chart. Right? So think about your time frame, think about your style, and that's how you configure this buy and sell. Once again, just what it's taken into account into this. It's similar but more and different logic, right? It's trying to find those motivations behind the scenes, and it's I don't know. Think each system has different logic, but again, candles, volatility, ATR, volume, anchored volume. There is also the VRBP points taken into account, moving averages that are hidden behind the scenes. It also takes a look at the crossings, actually. And this is from you, Tom. You were mentioning how you were using the crosses and the rebounding on these areas. So rebounding and crossing back and forth is factored into buy signals. Right? So that's why you can see these ones where it's close and rebounding. This is probably part of that factor. One of those Confluence systems saying like, hey, probably buy in. It crossed down, but immediately crossed up. These are all things taken into account within the system, behind the scenes, as part of the weight mechanism to trigger the signals. I've tried to do more complex things. I can't. Basically, I'm trying to do them in Python behind the scenes. Before I check in questions, I'm going to mention. I'll show some strategies that you can code in for this. Please be skeptic about these things. There is no free lunch. Please, right? The numbers are going to look very good. This is a machine. This is a backtest, right? Please be mindful of that, right? The only reason why I'm showing this is because to some degree, it proves that there is an edge. There is some advantage to it. At least it should be doing something well, right? If we can get these algorithmic results. So this is a strategy coded using the Confluence model with add, trim, and other, again, systems, right? So this strategy in Tesla sorry, I have let me see which settings do I have here. So I've been playing around. And actually, I'm going to start here. Yes, no, this is the correct one. I want to start with the negative win rate on purpose, just to kind of quell expectations. So ignore this one. It's configured in here. So please ignore the dates in here. It has nothing to do with it. You see in here, we have a 4% loss if we start using this strategy in January 2026. The key for this is that actually, if you had just bought and hold from 2026, you would be more than 4% down, right? So I'm starting on the negative kind of on purpose, yes, because I really don't want to sell magic beans on here. You would be, right, currently 13% down if you were doing buy and hold, right? If you were trading with the system on finalized trades, you would be 4% down. And obviously this is before many of these ads play. This ad is not in play. This buy is not in play. This ad is not in play, right? So hopefully if we start rebounding, we will go into the positive also faster than buy and hold, right? One more thing, I can't make it bigger, but I have coded, and this is more for me, you see that we have buy and hold and strategy. These are not adapted to these settings of 2026. But one important thing is when people do buy and hold, it's easier to just leave the money and let it ride, but you don't really reuse that money for other assets. So this is taking into account capital efficiency. How much of your capital is allocated, right? And how much return you are getting for the capital allocation. So it's the capital efficiency, let's say, is there, and you will see that you allocate less capital and you are more efficient with that capital if you are doing the buy and hold on this specific strategy. Finally, I know it's going to look ugly, but because the TradingView limitations, I've actually gone and done algorithmic backtests on many of these things. So if I go to, okay, I'll go Confluence. Let me use this. So I have these leaderboards. Let's see, not by year. Let me just take the main one. So this is what happens if you do the, and by the way, this is just the Confluence model, no mean reversion, no trends, nothing else, just using the information on the Confluence system. So I have tested, so these are all the assets, Apple, Bitcoin, gold, HIMS, Microsoft, NDX, Sol, SPX, TLT, US Oil, and UUP, VNQ. So just a random set of assets on different time frames. So 15 minutes, 5 minutes, 4 hours, 1 hour, 1 day, right? And these are the results using the Confluence model strategy. I'll make it bigger because I know it's not going to be very readable on just going long. So this is no short, just long plays only, right? And this is the results. So I'm going to ignore Sol because it looks too good. So I'm just going to go into the more reasonable ones. If we start to see, like, for example, ALAP on LIFO, one thing, this is always executing on candle close. It has no look forward. It has only past information. Every trade, every buy, and every sell, every add, every trim, everything is on candle close, right? Because I think that's the only way you can actually know if the human could do it. If you do candle open, which is the other system, you never know. When a candle opens, the signal might fire, and then the candle goes the other direction, and it disappears. You have no way to know how that candle is going to end. When the candle closes, the signal stays there for you and for the system. So all of these are on candle close. And then FIFO, LIFO, right, on different strategies, which, by the way, they don't play a role, basically. We'll see the results on this. So you can see basically ALAP on HIMS on 1 day, 193% return. This is, you also get CAGRs, the SRP, Sortino ratios, MDDs, profit factors, win ratios, right? So this one's important because, and you will see, it doesn't make that many trades. It's some of them do, right? 100, 171, 76. Because these are 4 hours, 1 day. It's not always trading. It's trading when it makes sense for the strategy, right? So you get the win percentage on those, the trades realized on that period of time, obviously on 15 minutes, way more trades than if you just then go to the 1 day, right? The capital efficiency is important for me because it's basically your return on that money. And I think the results are quite good, basically. I think this to some degree validates this strategy. And just to be clear, some strategies failed. Like just gold in the 5 minutes, you lose money, right? Bitcoin in the 5 minutes, you lose all your money. You are poor now because you lost 73% of it, right? So you're fast, right? You see 15 minute, 15 minute, 5 minute, 15 minute, all the losing factors are on the lower time frame. So this has a clear reference. Beyond Sol, I have no clue why it works so well on Sol 15 minutes, no idea, right? But all the other ones is 4 hours, 1 day, 1 day, 1 day, 4 hours, right? This is the time frame that this system excels at. And the asset then percentage return is also based on the asset itself. Gold has been very volatile recently, but not necessarily since 2020, right? So it still works in gold. It just works with less percentage return because gold is less. And final thing, fees are taken into account, deviation on entries and exits are taken into account because it's at market, so there is a factor to mark deviations, and there is no leverage in it. You can add leverage on this strategy. You can basically decide that you want let's say 75% margin, right? And then it will update the strategy with it. I just went with no leverage because I think that's just easier to manage. Then it's up to you and your leverage percentage. So this is the system. There is also some other things in play. I'll share at some point, and Tom, I have not shared this with you, so sorry. But I will share documentation of what things mean, right? So the market at a glance, what add means, prime, right? So the buy, trim, sell, what everything means at some point. One comment on the exit, only take exit because it's the simplistic one. This one is the most simple one. This should only factor if you just got a buy. So let me see if I can find a sell at some point. I think if I go to the 4 hour, it will be easier to find one. For sure, we should get an exit at some point. Let's see. No exits. All right.
There were some on Bitcoin, I believe.
Okay, perfect. Thank you. Bitcoin, Binance. I hate that it doesn't automatically adjust to the price windows. Yeah, for sure. We have some here. Oh, wait, let me see my strategies. Okay. Okay, I'm still on the... Let's see, I think here we didn't... Okay, let me go into the regular indicator because the strategy has to be adjusted for some other factors. So I'm not sure how it might have played in there. Let's see. I'm on the weekly. That doesn't help. 4 hour. Okay, here, exits. So exits should only be paid attention to if they come after a buy, right? So there are going to be cases where you get an exit signal, but the buy signal is miles away. I think I'm in aggressive, so it won't. Let me go back to neutral and neutral. So exits are tied to buys or to adds if they are within range, right? Not necessarily if you are playing the exits like, okay, a buy here and an exit here wouldn't make sense. Exits, I am the least confidence on. Feel free to ignore them. They have the least work put into them. At some point, I will improve them. Not now, because I have things to do. I'm supposed to be on vacation. I'm not good at it, but I'm trying. So pay attention to exit because it's basically trying to tell you it broke the range, right? It broke the system, right? It's no longer valid, but in a very simplistic way, not as much refinement as the signal itself. So pay attention to them at your own risk, let's say. The other ones I'm confident I've done the test. That's it. That's all I have to say.
Great. Do you mind pulling up SpaceX really quickly on the 15-minute and 5-minute?
I remember
there was a question in the chat. So yeah, on the 15-minute, on the version you have now, see that sell signal? It's perfect. But if you run the update on the public version, the sell signal disappeared. Do you mind just explaining what changed on the parameters? Because you changed some of the aggression.
I had to do some changes because I found a bug. Again, there is a setup and a confirmation, right? It's always setup first because if you do setup, it helps you not have to wait that much. Invite only my Confluence Bands. I have it. This is the public one.
Yeah, that is. I think you have the public one on there, but it hadn't run the update. You were giving the purple.
Wait.
Or maybe I'm. Well, no, it is still giving it. Okay, I wonder what happened on mine that I was not.
I think it's updated, right? Like I don't see.
Yeah. The second instance you have there. See they.
Okay, yeah, here. Let me see. So let me take out some of the other ones. Okay, here. So yes, some of these were changed recently on the update, mostly to find more data on some of them, and the system was a little bit less aggressive. There was a bug with the setup and pre-setup, and it was placing things where they shouldn't be. But yeah, this is just a factor on how the data required for a cell has changed to make it a little bit more aggressive where it needs to be. I think I understand 15 minutes, especially for something like this. I will just go back to kind of the status here. It's not super dialed for those systems, especially with the new updates, which this one is, the backtest is running. It's doesn't have the same type of information confluence through the noise, let's say. So yes, I understand it's sad that we don't get this very nice signal. It's for the better on the 4 hour, on the 1 day, and on most assets. So
so optimizing for the higher time frames.
I understand it looks very nice when it nailed those, but if after running the test and kind of looking at the charts myself, I prefer the working system on the new version for the areas where it's kind of more excels at more, to be fair. So we lost our magical, let's say, system on this one. Also, it now requires more information. So I'm not sure if it can even fire at this point. I think it requires a little bit more history for some of the assets. So sorry, not sorry, I'm not moving it back kind of situation.
That's okay. I think it's better to be more conservative with these. And it's worth noting that with, no indicator is going to do every job and be perfect. And we shouldn't blindly follow buy and sell signals. My view of indicators is have your thesis. Any trade you take, know why you're entering, know what your invalidation is, and then you're looking at the higher time frame trends, zooming in. So even if you're trading the 15-minute, you know what the bigger picture trend is, uptrend, downtrend, and then you can use this as a bit of confirmation saying, okay, all the math in the background that's stripping out the emotion, that's stripping out my bias is saying these signals are aligning, and then you apply a weighting to your logic. But there was one question on the 5-minute. I need to go back in the chat. They said a signal fired in the past. Let me try to find that comment in the chat really quickly.
Yes, that's the error that I fixed on this new version. So
so that's fixed.
Errors, because there was an indexing error. So there are behind the scenes, there are two variables, right? One is, let's say, the pre-setup. The other one is the confirmation area. And there was an indexing thing where it was updating the wrong index. So instead of putting it, so what would have happened is, instead of putting it, let's say, here, it would have put it here, or vice versa, right? So it would have done something like this. So this is where confirmation happens on the current version, and this is where setup ends, right? So this is setup, this is confirmation. It would have done index kind of to a -1, not -1, but you get my point. I'm trying. I'm not sure how coding experience is here, right? So it would basically say, right, hey, confirmed, go back 1, confirm, and this is the error. That's why I pulled it off. If you remember, I sent a message on the channel saying, like, please take it off. It was going to confuse people, and I really don't want this to lie to you guys. So this was the error, right? Obviously, it looks better if it is here, because this would have you exit at 210 and not 209. Small difference, but if this would have been this candle, right, it would have exited you at 205, right, instead of at 210. So that was a mistake on the indexing on my part. It's fixed on the new version, so please make sure that you do have the updated version. You will see it will move around your signals, but you will be able to trust them. And I'm happy to share the backtesting results if that's also something that you guys want to have.
That's actually... one of the questions was saying, in a future update, would it be possible to include backtests to see how things are functioning?
Yes and no. We can, right? I have it here. I can definitely share this one, right? This would be kind of your backtest. We can. The part that worries me with backtest is I think they can be poisonous to the people using them because it's very easy to change all the settings until your backtest looks perfect. Your ROI is infinite. Your capital efficiency is over the top, right? It's the best thing since bread, right? I kind of prefer if people are just looking at the chart and to see if it makes sense to them, right? Like, would I think this is a good entry now in hindsight type situation rather than look at the number big, number good, right? That can fine tune the system for a situation that might not be what's happening. You get your perfect backtest here, price goes up or goes down. It's no longer sidelines. Your backtest makes no sense. You are getting false information now. So to some degree, kind of protecting the user from themselves somewhat, right? I understand people will want to tune things. I think it does not always help. I think it's best just please do your own analysis looking at it. Do not trust a blind number. Imagine I make a mistake on a formula behind the scenes and your number is 1.3 times better. And then it's my mistake. You have no way of going into the code and seeing that it's my mistake. You are blindly trusting that I have a correct formula. I prefer if you guys look at it, to be honest.
Yeah, I would generally agree with you. If anybody's been following my charting for a while, some of the other indicators that have backtests, I never have them on for that very reason, because you can change your entry and exit settings and you can fine tune it, but the regime in which an asset is trading is not static and it's always evolving. And, you know, there are assets, say, that ran in 2021 where you might get great backtest results, and that's not the case for the future. So I agree with you. Looking at the bigger picture, seeing what's happening, looking at some of the recent signals and saying, is this working? And not use, you know, a backtest in some ways gives you confidence in an indicator, but you don't want it to give you blind faith and just have you acting on the signals.
Yeah, again, it's perfectly doable. It's clearly technically doable. I'm really just always a little bit scared of backtest on the. It really can give the wrong image, especially or blind confidence. We can do a poll again. If it's something that clearly everyone wants, I'll do it. Right, but again, I would be careful of using the backtest.
That makes sense. Yeah. Okay. Darwining is asking when you're going to give him an AI agent so he doesn't have to look at his computer anymore.
I have the HTML that I shared with you for that one.
I know you're on it. Okay, let me check the chat here, and I'm a little bit behind. I would love to see Matthew saying VS's code backtest because I like to learn the code part. Geek curiosity. Let's see. True optimism backtest doesn't predict the future. That's from Stoic. Yep, you're right. I think the biggest takeaway is don't trust the indicators blindly. Yeah. Yeah, they are there to tell us when a bunch of things are aligning. I like to think of them. There are so many factors going into all these tools. And even though I try to watch a lot of things on the charts, I miss certain signals that are firing. So indicators like this help give me a check that, okay, all these things are aligning. You should be paying attention at this point, and then bring that together with the overall analysis. It's like, you know, having a friend who's only looking at the data, none of the emotions. And I know we talk about taking the emotions out of trading. I think thinking about emotions and what the market is doing is equally important as just looking at the numbers, because we have a lot of herd mentality going on. And sometimes things run way beyond all the signals you're getting, as we saw in the RSI tools. RSI can be overheated and to say weekly, everything is saying sell, but the asset keeps moving up. Well, there's emotion and froth in the markets, and the market is doing something irrational. So there's a bit of a middle ground there. Okay. Is there a plan, JK is saying, for an optimized trend-like tool or more coming tools that you are working on? We haven't really talked about an optimized trend version versus just the trend flip. I mean, it's a similar concept, I would say.
I would say It depends on how you do some settings on some of the
Yeah.
trends. You could get it. Like, for example, I think by default, it looks at like 21 and 55 on the volatility gated trend. You can bring that down and it will be more reactive if you do 9 and 21, for example,
Yeah.
right? You can kind of do it in that way. I don't particularly have a plan for optimized trend as it is. I also don't know how much we need to go into those. I was thinking those trends I like, so I'm comfortable with trends. One is the reactive, one is the gated one, let's say. And the other tools, I'm sure, like there can come. I think some of the Quant members have seen the relative rotation graph. That one I use a little bit. That one I've been using, but it's the same one that you are getting on Discord, just different visualization, maybe to some degree, right? With history on it. So it's the same one that you see in Discord, or trying to do the same thing, right? I also don't want to comment a lot on what might or might not come in the future, because I'm not necessarily trying to generate hype, right? On it, right? So if it comes, it comes. And maybe what I mentioned in Discord, right? Just if you have a need, if there is a gap to be filled, you may test it, and then I might work on it. No promises, but if there is a gap that you have, just maybe mention it. That's maybe all I'm happy to promise.
Yeah, I would say the same thing. I think the indicators are at a good place for my style of trading. There are hundreds of indicators out there, and there are too many for any one person to focus on. I think the important thing is find the tools that work for you. Maybe they are these, maybe they are other tools. I think we'll look at refining things. I have a few little things that I'm working on in the background. I have one, it's almost like an advanced decline line, but it's just looking at the last hour of trading and giving a composite score to that so we can see, are we getting positive last hours versus negative, and just using that as a general sense of S&P 500 and NASDAQ strength and weakness. But that's not a primary indicator. That's just a line you might keep on your chart at the bottom, like a moving average in a different pane.
Wouldn't that make more sense for the Discord, a message on the Discord as a notification?
I think that's actually a better tool. I've been working in a Pine editor, but you're absolutely right. I think just a Discord message with a daily read of what the last hours have been doing to give us a strength check is probably a much better tool. Okay, so the last thing I want to do, we'll still take questions here, but I just want to talk through how I'm setting up these tools, and then we'll take any other questions, and then we'll call it a day. And this is by no means the only way to use the tools, but just so you get a sense of how I'm thinking about them. One thing with the optimized trend that someone was asking about, you can change this with the fast and slow, like Manais was saying. So if we move this more to a 9 for the fast, you can see how it hugs the price action more. Yeah, I mean, you can even really go way down. I don't know what the optimized trend is using, but you could bring up optimized trend and you could adjust these two, and you could try to get pretty close. And then it's still working on cutting out the noise as much as possible. But we won't get into that. So basically what I'm doing here, I obviously have the Confluence Bands, and I like to have the signals on for this. For me personally, just to clean this up, I like to turn off the show buy and sell. Oh, no, that's not the one. Where is the text? Exit markers. Where did I put that? Too many options. Show. Oh my gosh.
I think it's at the top, maybe.
At the top.
Yes. So informing. I know. Sorry. Go to style. I think it's in style on the latest version. There's been so many versions of this. At some point, we did have the way to take it out. Did we maybe not publish the cosmetic one? That might have actually.
I might not have.
Versions. It might not be published with the cosmetic one. because I cannot. So buy sell signals on markers, I think.
Yeah, no, that was it. Okay, I was at the right one. Sorry, I thought I,
Yeah.
again, not enough coffee. So I like to do that just to clean things up and not have too many things going on my chart. Then I obviously like having mean reversion on the chart, so we'll bring that back up. And then stack attack for the RSI. This is how I'm trading 90% of the time. And for stack attack, as I was saying, just because it gets a little bit busy, I'm turning these off. You can absolutely keep them on, but I'm just using the colored. I like actually keeping the dip reentry on just for fun, but I'm just using these colored stacked areas. And then if you want to bring in a trend model, you absolutely can bring in, I would say the adaptive trend is most likely the way to go to not make things too busy. But if I had this on, which I don't right now, I would bring down the opacity on all this just because I don't like to have too much going on my charts and too much visual clutter. And you can change the opacity on all this just to keep that overall read on the trend. So that is basically it. But let's bring the chat up and see if there are any other questions.
We have one from Omar that he's trading Forex, and he mentioned my issue is that the painting of the lines, so the 1 hour, 4 hour, and daily seems to be confusing to me. I think this might be on the TA
The
mean
bands?
reversion. I'm not. I think it's the TA mean reversion, but I'm not sure. That's
Okay.
I would love if Omar you can mention exactly which indicator is.
Yeah. And one thing
It's
I
a
did
stack
want to
attack.
mention,
It's a stack attack.
it's stack attack. Okay. Just one thing, because he said Forex. What I mentioned about how price flows through the confluence bands and how we can determine a baseline narrative, it doesn't work for Forex. It will work for equities, it will work for crypto, but I've tried it on Forex and it just doesn't work. Now, for stack attack, Forex, it might be giving you something similar just because it is so volatile and choppy. We'll have to do some testing, but the unfortunate thing is, something like stack attack with RSI is meant for slower, steadier moving assets. And I feel like Forex, there's a lot of range bound chop and it's not these bigger trends.
I think the stack attack also by the nature of it, it's going to be more static on its behavior. There is not a lot more fine tuning. It's basically just looking at RSI status, right? So it's going to be directly on how the weekly, daily, 4 hour, 1 hour RSI, or again in the minutes, depending on your time frame, behaves for that asset. So I'm never done Forex, but that might play a role basically. It's just the RSI. There is not fine tuning to be done necessarily there. So that one, I'm not sure how much I can help. Let's say.
Yeah,
I've never looked at it. Basically, that's yeah.
I have not done much Forex trading either. So, Stoic, I do have a question about the key differences between mean reversion versus stack attack for overbought, oversold. Yep. So they're answering two different questions in the math. So RSI is generally speaking a momentum indicator. And the reason bullish and bearish divergences work on the chart is because it tells us when price is pushing up to extremes. So in this instance here, price pushing higher, while buying momentum is already coming out of the trade. So it's answering that question. I've generally used RSI on other mean reversion tools to tell me which dots to really pay attention to. So this dot I might not pay as much attention to because RSI isn't below 30. I would pay attention to some of the earlier ones on these lower dips. But mean reversion is asking the question, how extreme is the price action from what the mean or the baseline average is for the trading range? So as we're getting volatility expansion to the upside or the downside, when are we getting to those extreme levels where price action is probably going to snap back to the mean? Now, they move a little bit in unison because in some ways the momentum and the volatility of mean reversion expansion move by similar metrics, but together they help us, I would say, bring the full picture into view for when we're getting those extreme moments. I don't know. Is there anything you want to add there, Melissa?
Yeah, I'm looking at the euro and dollar chart.
Mm-hmm.
I'll steal the screen for you
Yep.
if you don't mind. So I think they are indeed looking at different things, and that I think it's some of the 4-hour US euro. You see, I can see like the RSI is super steady. You don't get kind of this as much outside of the bands action
Mm-hmm.
on the RSI. So while we do get kind of mean reversion signals, and I think this is mostly because this one is trying to look at different things, like they are answering different questions to some degree with correlation. There will be correlation, but I think it's normal behavior for this to not always fire at the same time, right? Because especially on this one, I can see it's quite steady on the other side. 15 minutes, I can take a look. Let's see. Even still, like we do get more ticks in this one, so this is fair enough, right? But again, I would take a look at your weights. Maybe we can bring back the weights, because that is what might be causing kind of like, yes, you do get a mean reversion dot here and you are green here, but you also get a mean reversion here without a mean. I will, one more thing, obviously. Forex might not be as asymmetric, so you might not want to be on asymmetric on Forex. I'm fully guessing. I have no clue about Forex. But I can imagine it's not necessarily the same type of trending market on euro dollar, for example, right? So again, I think they answer different questions. So it is to some degree expected to not see them fire at the same time.
Yeah, that makes sense.
Yes, it's here.
Sasha is asking if I've phased out IADSS. I would say IADSS is calculating things differently, and there might still be use cases where you want to revert back to that. I will say personally, I prefer the stricter methodology of how we are calculating things, and on mean reversion, also the adaptive trend and how mean reversion is calculated in this sense. It is a completely, I would view them as, yes, the tools on the surface look similar, but the math behind mean reversion and the logic behind the buy and sell signals is completely different on each. So you can just try the two side by side and see what works for you. There are still instances where I am going to go back to IADSS, particularly when I'm working with James's community. But I will say, in full transparency, this is what I've been using on my charts for a while. And so far, I'm really happy with it. And I like that we have the ability to continue shaping it and refining it. Okay. Let's see. Omar. That makes sense. I correlated. Omar keeps saying go turn on stack attack. What is I
there
don't
was
know.
turned on. I'm not sure if it. I did turn it on. Again, my answer on that one is first, full disclosure, they were not designed with kind of Forex in mind. So I cannot say how well they are going to perform in there. They were clearly designed with equities, crypto type situation in mind. The other one is they are answering different questions. So I think it's standard behavior for one to fire where the other one isn't. I would say that is, to me, expected behavior.
Yeah, that makes sense. And then the one thing I do want to say too, so stack attack, the Confluence Bands, and mean reversion, they're only available to the Quant tier. There are 4 seats left in Quant. I have to think about this because I want to keep the Quant tier small so we can really keep that intimate feel to the community. But if you are a trader member watching this and you really want the tools, shoot me an email. I'm just going to keep a log of what the interest level is and then see if there's a way to maybe upgrade a few of the existing trader members, but not have it get out of hand. So I'll take that on a case-by-case basis, and I'll think about that a little bit more. Okay, let's see what else we have. Would it be useful to create an indicator that looks at volatility of an asset? I think in some ways we're already calculating the volatility of an asset, but what do you think about that?
Every single indicator is looking at
Yeah.
volatility. Every single one.
Yeah.
Volatility and volume are taken into account into all of them. That's the answer. So bands, like the bands, the sells, the buys, like most of what you're looking at, plus whatever is behind the scenes, is taking into a look at, again, volatility, volume, VRVP type situation. So everything is factored in. Even in fact, if you go to mean reversion, there used to be a setting that it's not there anymore. That was for volume climax and volume getting dried up. So that's for, again, it's taken into account.
Yeah. Okay. Wonderful. Let's see if we have anything else. Matthew says, I love the small community, but also would not downgrade if I could get the indicators at a lower tier. Okay, great. Can we have something that shows ATR levels or using pivot points standard as a free alternative?
I have an ATR indicator, by the way.
You do? You do?
I did create one.
Okay, I haven't worked on anything, so yeah, we can. If that is something you want to send out there, yeah, I mean, as we can talk, and I can just add it to the list because I've got the tool going that'll sync everybody.
It's very ugly, so it will need to be refined, even just from the visual perspective. There is one. I was just curious about it.
Okay, all right. Well, maybe a background project for when you're not on vacation. All right. Well, let's see. Oh man, there are more coming in. Mops is saying today's session was exactly what I needed to fill in the gaps in understanding. Great. AL7050. Tom, where can we find these tools in Discord? Trading resources? The indicators, or I'm not sure what you're asking for, but there is a new channel in Discord under, hold on, let me make sure I'm naming it correctly. So under the top section where it says TA resources and alerts, there is an TA indicator support tab, and Milius is actively responding there, as am I. And actually, I see I have 4 alerts to respond to. And then if you want to access all the tools, it is just via that Google form that I shared earlier. I'll put it in the chat again. And you enter your Patreon email and your TradingView username, and then you will be given access. There's an app that runs in the background or a bot that scans it every 30 minutes and grants access. So any plans to do rotation-like model? That one is a little bit complex, Max, and we haven't even really thought about it. And that one is James's own thing. He spent upwards of 7 figures having that developed, so no plans on rotation model. But yeah, ATR, we can see about doing something like that. And I think we're to the end of the questions. So last call, as it were, at the bar, and then we'll let Milius get back to his vacation, and thank your girlfriend, partner, for granting us this time while you are supposed to not be working.
I will. I'll pay the price.
Pay the price. We appreciate your sacrifice very much. Okay, wonderful. Well, I think that's it. We'll call it a day. We'll let everybody enjoy their long weekend, and I'll get the recording posted here shortly.